And I think when it comes to gold, and obviously to lesser extent silver, I think it's really quite simple for me this year. If you look at the performance of gold in US dollars, because gold is priced in US dollars, if gold is an antidote to the dollar, to fiat currencies, it's performed badly this year because the fiat currency has been so strong in the dollar. But if you look at gold in other currencies around the world, the British pound, the yen, etc., you'll see gold's put in a good performance this year. In some cases, gold's done extremely well. And so when you're in another currency other than the dollar, and the reason to hold gold is to protect against a fall in the fiat currency, gold has done that job. The one currency that's bucked the trend clearly is the US dollar because of the interest rate rises in this economy. And so that has hampered gold. But I think we go back to, is the dollar peaked? And certainly the dollar's been on a downward trend now for the last sort of month or so. If that continues, or indeed it just pauses from here, I think we see the rally in gold, and maybe we've already seen the gold bottom.
And when you say a rally in gold, because I know the folks at home are going to send in emails, well, what kind of rally are we speaking? Is it getting to 2,000? Is it above 2,000?
I don't think it's anywhere near that at this stage. I think for a 2,000 type scenario, you have to see some broader dislocation in the economy. That I think probably the most likely thing at the moment comes from, a mistake from the policy, particularly from the Fed, leading to something major breaking in the economy.
How about the lack of institutional investors and interest in the space? You're on the ETF side. What are you seeing?
Yeah, it's been pretty muted, to be honest, and that's been sort of understandable in a world where interest rates are rising, the dollar's been so strong, and gold has performed badly in relation to that. So it's been a funny year. It's been a year where nothing has really worked except for a lot of the commodity complex.
And I know others would argue, but gold has worked. It has done relatively well compared to other assets, Will.
Yeah, I mean, I guess, on a relative basis.
There's two ways to see it, right? Like you could say it's underperformed given the financial landscape we're living in, but comparatively speaking to other assets.
Yeah. So obviously on a absolute basis, people have lost money in gold this year. But on a relative basis, if you're comparing it to the broader market, etc., it's performed. It's relatively well.
Do you think something needs to change? Because I know in the past we blamed Bitcoin. Oh, the money is flowing to Bitcoin, to the cryptocurrencies. But now what can we say? Why is there that lack of interest? I know you say it's understandable, but why is that understandable?
I just think because this is a year where everybody is down almost. So the 60-40 portfolio, which you can say doesn't include gold typically, but this is probably one of the worst years on record going back to the Great Depression. So money managers are really scratching their heads as to what to do. What is it that they can do in this environment that's actually going to work and make money for clients? Equities have not worked, bonds have not worked, and certainly other assets like gold on an absolute basis, people have lost money this year. And I think in that environment, when portfolios are down, it's really tough.
That's a fair point. But let's talk about central bank buying now. 400 metric tons on the quarter of September. What's your take on why some central banks that we hadn't seen buying before are really stepping up? What does this say about their outlook on the world economy?
I think it's more of a question for me, or more of a case of what we've seen from central banks consistently over the last, let's say, 10 to 15 years, which is, we're not talking about sort of Western central banks, so to speak. We're talking about other central banks around the world that are trying to manage currency reserves and create a diversified portfolio largely away from the dollar. And I think in an environment or in a world where the dollar's become so strong and you're importing inflation, having an allocation to gold has become a lot more important for some of these central banks.
Let's just get back to commodities for a second. Interested to get your take on the copper story, the shortages we're seeing there, the premiums that we're seeing placed on copper. Your take on what's seen as the barometer of the economy?
I think again it's largely down to what we're seeing, in the commodity spectrum or across the commodity complex more broadly, which is these supply concerns or supply constraints that we've had in the market, over the last sort of certainly 15 to 20 months, but exacerbated by years and years of underinvestment. There's just no quick fix for it.
Yeah.
And the bottom line is that a lot of these other variables to bring inflation down, for example, can be brought into line, and some markets are easing. But fundamentally, when you're looking at a metal like copper, that's just so important to affect this energy transition that all the major, certainly Western governments want to enact. And so finding supply of copper and getting supplies of copper is going to be increasing, or is going to be a big challenge over the next decade.